Welcome back to the channel. Today, we're diving into a significant economic event that just shook up the financial landscape: the Federal Reserve's decision to cut interest rates by a whopping half percentage point. This marks the first rate reduction since the onset of the COVID-19 pandemic and signifies a critical shift in the central bank's approach to tackling inflation and supporting American consumers, who have been grappling with rising costs. So, what does this jumbo-sized rate cut mean for the economy and for you? Let's break it down. First, it's important to understand the context of this decision. The Federal Reserve has been engaged in a long battle against inflation, which has consistently hovered above their target rate of 2%. With many Americans facing higher living costs for the past 2 years, the Fed's actions are aimed at easing some of that financial pressure. In a press conference following the announcement, Fed Chair Jerome Powell emphasized that this decision is not a signal of a new pattern for rate cuts, but rather a strategic move to keep the economy and the labor market robust. Interestingly, Wall Street had mixed reactions leading up to this announcement. Analysts were divided on whether the Fed would implement a typical quarter-point cut or take a more aggressive approach with the half-point cut, which they ultimately chose. After the announcement, markets initially surged but then quickly turned red, showcasing the uncertainty that still looms over investors. President Biden also weighed in on this momentous decision, calling it an important moment for the post-COVID economic recovery. He highlighted that with both inflation and interest rates on the decline, it signals progress for the economy. He plans to discuss this further at an upcoming address to the Economic Club of Washington, emphasizing the administration's role in creating jobs and lowering costs. But despite the excitement surrounding the rate cut, Powell made it clear that the Fed is not declaring victory over inflation just yet. While there are signs of progress, the inflation rate remains above the desired target. Powell stated, "We're not really at 2%, reminding us that the journey is far from over." The Fed's cautious tone underscores the complexity of managing economic growth while avoiding potential pitfalls. Now, one interesting aspect of this decision is the speculation around whether the Fed succumbed to market pressure. Just last week, traders were leaning towards a quarter-point cut, but as anticipation built, the consensus shifted to a half-point reduction. When asked about the influence of market expectations, Powell maintained that their decisions are based on what they believe is best for the economy, not on external pressures. As we look at the broader economic implications, it's worth noting the Fed's commitment to maintaining its independence from political influence. In response to former President Trump's earlier remarks about wanting to exert power over the Fed, Powell reiterated that the central bank operates solely in the interest of all Americans. This independence is crucial for making unbiased decisions that prioritize maximum employment and price stability. Another key point from Powell's remarks was regarding housing inflation. Despite overall inflation cooling off, housing costs remain stubbornly high. Powell acknowledged that this is an area where the Fed's influence is limited, primarily due to the supply issues in the housing market. He expressed confidence that as the Fed normalizes interest rates, the housing cycle will eventually stabilize. So, what does this all mean for you? Lower interest rates can lead to cheaper loans for consumers, which might encourage spending and investing, whether it's buying a home, financing a car, or even just putting money into savings. This rate cut has the potential to ease some financial burdens. However, it's also a reminder to keep an eye on inflation, especially in sectors like housing where prices may still be on the rise. As we move forward, it will be crucial to monitor how these changes play out in the coming months. Will consumers respond positively to lower rates? How will the housing market react? And what about the ongoing battle against inflation? These are all questions that we'll be watching closely. Thanks for tuning in today. Make sure to like and subscribe for more updates on economic news and how it affects you. If you have any thoughts on the rate cut or what it means for the future, drop a comment below. Until next time, stay informed and stay savvy.